Hello, ladies and gentlemen. Welcome to the art of long-term care planning. I am Srinivas Nikam, NIK NIKAM. You can just call me Dr. Nick. I'm a cardiologist, an agent with the New York Life Insurance Company, and my colleague is Dr. Siddeshwar Guba. He is a virologist, and he's one of the agents here in Sugarland area. So we are going to be talking about long-term care. As we enter the golden years, as they call it, as the baby boomers enter the stage of retirement, some of the most important things that really matter in our lives is not our job, not accomplishing a degree or promotion or a trophy. Our prime concern is health. As a cardiologist, as a doctor, I can tell you the number one priority in the golden years is health. While we focus on health, we also want to make sure that we are self-sufficient, self-reliant, and able to take care of ourselves, just in case we are not able to take care of ourselves. So that's an important point we need to keep in mind. Number two, family is important. I tell you, I lived in two small towns for 1 year each. I gave up a lucrative job because I couldn't stay in a small town without being connected with the people like my family or my friends. I had lived in Houston for 38 years, so the last 2 years I said I had it. So I had to give up my job and return to my familiar place where I can interact with my family and my friends. So a family is important. At the same time, we don't want to be a burden on our family members. Our family members don't have to choose between taking care of mom and pop versus doing their two jobs to keep the family going. Talk about social relationships. Keep the family going. Talk about social relationships. I already mentioned about why I left two small towns and came back to Sugarland or Houston, because to me, any amount of money was not worth the social interaction I had in Houston for 35 years before I went to these small towns. Our friends are important, our neighbors are important, and our social interaction is important. We are human beings. We are a social human being. We cannot live in caves. We are not meant for that. When we are talking about friends and relatives or neighbors, again, we go back to the question of we don't want to be in a position where we have to depend on our neighbors or our friends to give us some basic help in case we need it. It should be the other way around. We should be able to help anybody who needs help, able to volunteer our time so that we can help other beings. Next, able to volunteer our time so that we can help other beings. Next thing is financial security. We worked all our lives for 30, 40 years to save a little retirement nest. The last few years of life, we don't want to see our retirement nest being seriously eroded by healthcare issues that require an enormous amount of labor and resources and finance. So if we want to protect our retirement nest, beyond all this, we need to have a peace of mind. I mean, the peace of mind is there when we are healthy and we are wealthy and we are in a social network. Slide 4. That brings us to the question of long-term care in case we need it. Because we want to stay healthy, we don't want to depend upon our family members or a friend. We don't want an insurance if we don't have. We don't want to erode our retirements to pay for those expensive services in the latter years of our life. And above all, we need to have a peace of mind. If I need help, I can get it. What is long-term care? So these are some of the basic things like eating, dressing, bathing, transferring from bed to a chair or to the bathroom, toileting and continence. If we cannot do 2 out of these 6 functions, then we need chronic long-term care. It could be a short-term, but nonetheless, we need assistance. In a long-term situation, Medicare doesn't cover this, neither do most private insurances. Long-term care is a special kind of insurance, addresses these in terms of providing healthcare services at home, at your home, or at an assisted living, or at a community living, or at an adult daycare center, or a full-blown 24/7 service in a nursing home. Slide 7. We take it for granted when we can do all these 6 basic functions. But there are times when we're recovering from a medical illness, we're recovering from surgery, or when we're recovering from like a fracture. We need a short-term assistance for maybe weeks or maybe months, where you have to undergo rehab and make sure that you can get the needed coverage. Otherwise, you have to pay from your pocket, dipping into your golden retirement nest. Slide to the statistics. 52% of the Americans over the age of 65 will need some form of long-term care, be it for a short duration or for the duration of their remaining lifetime. 57% of the women over the age of 65 need long-term services. Slide number 8. Let's think about it. Who would provide this long-term care if we need it? Where do we receive this care? Do we have to go to a nursing home or a skilled nursing unit for every situation? No. And how do we pay for it? That's a very important aspect of long-term care. And what is the solution? Ask the audience to participate in this little exercise and see what their answers are. 11. Who would provide this care for you if you need it? When we are talking about who, the first question that comes to our mind is, my daughter will take care of me. My son will take care of me. It's a wishful thinking. They have their own family. They have their own kids. They have their own responsibilities. They cannot provide extended care for their ailing parents. Slide 13. Now let's look at statistics here. The average age of a caregiver is 45 years. 75% of the time, the care is given by the family members, which is uncompensated. Most of the time, it is the daughters. The average time a family caregiver provides per week is 24 hours. That's 24 hours away from their own family and their own kids and from their own professional responsibilities. Think about it. If the care recipient happens to be a spouse, more than 45 hours a week are spent on taking care of this spouse. In the short run, this may be an answer if you are just recovering from a surgery or if you are recovering from a fracture, but when it drags into months and maybe perhaps years, it's going to be a significant emotional, psychological, financial impact on your children, something we seriously need to take into consideration. Slide 14. Let's look at some more effects of a family member serving as a caregiver. 78% of the people experience out-of-pocket cost in taking care of their parents. In 2016, it was estimated on an average a family caregiver spent $7,000 out of their own pocket to take care of their elderly parents. Over 50% had experienced some kind of a stress or psychological impact due to taking care of their parents. Slide 16. Most of the time, when we talk about long-term care, people immediately think, oh, you're talking about nursing home care, somebody who needs to be in a nursing home 24 hours a day, 7 days a week. No, not necessarily. The long-term care services can be delivered at your own home, which is the most preferred way of delivering the long-term care and is the most often place where long-term care is provided. It could be in your community, like at a community center or an adult daycare center, or it could be in a place where you are living in an assisted living where there are people of similar age are there with the facilities for cooking, a common room and transportation, all these things provided to you. And the last option would be a nursing home, just in case you need round the clock medical supervision. Here is an important and surprising statistics. Over 80% of the long-term care services that are provided in a home setting. If you are not able to take care of yourself in terms of accomplishing 2 out of the 6 basic necessities of life which we talked about, then you're going to need home received in the person's home, which is the way most of us would prefer. We don't want to be going somewhere to get help. We want someone to come and give us some assistance, even though it is for a few hours during a week. That was slide number 19. When we talk about any kind of assistance, service is expensive. Slide number 19. The next question is, how are we going to pay for these services? A home visit by a healthcare aide or anybody for that matter will cost you $100 to $200 a day. How are we going to pay for those expenses? We don't want those expenses to erode into our hard-earned golden nest, retirement fund. Slide number 20. Even before we talk about who is going to pay for these expenses, let's find out how much does it cost. Slide number 21. Slide number 21. No matter where we get this, at home or at a living facility, nursing home, how are we going to finance these expenses? Slide number 22. The hourly cost of a healthcare aide, I'm talking about just healthcare aide, is approximately $24 per hour. But if you need 20, 30 hours per week, then it's going to add up very quickly and turn into a balloon over months and years. Right now, you may be happy living in a 2-bedroom apartment where the rent could be like $1,500, something like that. But if you were to go to the next level, like an assisted living place, a 1-bedroom unit would cost you approximately $4,700. And if you get a 2-bedroom unit, it could be close to $5,000. It could be close to $5,000. You need to find out what the cost of an assisted living room is in your place. Then you will find out it is expensive. It will cost $50,000 to $60,000 a year to live in an assisted living place. Slide number 24. If you look at the cost of a nursing home care for a private room, you will be astonished. It's over $100,000 per year per person. And if you have a couple living in a nursing home, then you can imagine the financial burden or stress that they and their children are going to have. A semi-private room is only $10,000 less. Slide number 25. Then you may be wondering, based on the historical data of people having paid for these services through their insurance companies, what is the average amount of money required to provide these kinds of services. The average is approximately $172,000. It ranges anywhere from zero, if you're lucky, all the way up to or beyond $400,000. But this bell curve will really give us a pretty good idea as to the window where you would like to be, somewhere between $150 to $200 to $250,000 coverage, so that you are protected as far as long-term care is concerned, and your retirement nest is protected, so you are not dipping into your retirement fund to pay for these long-term care services. Later on in the presentation, we're going to bring up the live illustrator from New York Life and show you how much insurance you need to have this kind of a financial protection for providing the long-term care services. Slide number 27. So what are the options do we have? Of course, we talked about the family members. I already mentioned about Medicare. Medicare only pays for the first 20 days, 100% of the acute care services needed in a skilled nursing facility. After that, it will cover up to 100 days, part of which you have to pay, and beyond that, Medicare does not cover. Medicaid covers long-term care services, especially if you're Medicaid, but the eligibility criteria are so strict. If you have any assets in your retirement fund, the chances of you getting Medicaid services are very small to slim. And even if you qualify, even if you move all your funds into your children's accounts and whatnot, when you take these medical services, when the time comes, Medicaid can go and track back your assets and collect the payments made for the long-term care services. Relying on family members not only for service but also for financial support is not the best option we need to keep in mind. Your last resort would be to pay out of your pocket. I mean, it's possible. If you have $5 million in your assets, you're just husband and wife, and you don't have any kids, you can afford to spend $400,000 if a long-term care assistance is needed. You can say, okay, I'm going to pay cash, which is fine. If you can afford it and it's not going to have a major dent on your retirement funds and on your future, by all means, you're fine. But if you are between $1 and $2 million and you have to shell out $500,000, that's almost 25 to 50% of your retirement nest. That's when you have to really seriously think about how you can protect your retirement nest, but at the same time be able to fund these long-term services if they are needed. That was slide number 27. So let's move on to slide number 28. Slide number 28. So narrowing down our options available. The government assistance like Medicare and Medicaid, which I already talked about. Out of pocket from your personal assets, investments is something you really want to avoid. If we want to avoid dipping into our retirement fund or relying on our children to pay for our long-term care services, insurance products, a combination of which can provide the financial target that I just talked about, so that you have some kind of protection of paying for those services and at the same time avoid dipping into your retirement account. Slide number 29. I touched upon this earlier during the presentation. Our traditional healthcare policies, with some exceptions, only provide for a short-term skilled nursing care, not on an extended basis. They provide for a short-term rehabilitation services, but when it comes to long-term services, the traditional health insurance company does not cover. Slide number 30. I briefly touched upon this. Medicare provides for the first 20 days of the services following a 3-day stay in a hospital. That's the general requirement, but it keeps changing. And between days 21 and 100, you have a copay, and beyond 100 days, Medicare does not cover anything. Slide number 31. Many people surprisingly believe that Medicare is going to cover their long-term care services. Medicaid does pay for long-term care services, but you almost have to be at a poverty level to get Medicare services. Some people think they can move all their assets and then try to get Medicare services. Even if they get Medicaid services, when time comes, Medicaid can go back and recollect all those payments, dollar per dollar it has paid, if they can discover the person had assets which were moved in order to qualify for Medicaid. And here are the requirements to be eligible for Medicaid services. If you are an individual, you have to have an income of less than $2,000. If you are married, you can't have an income of more than $3,000. You can own your own house, your car. It doesn't matter if it's a Lamborghini. And obviously, you can't own a boat or something, or a plane. Your total assets, your spouse's asset, cannot be more than $128,640. If you meet these criteria, you may be eligible for Medicaid. But I want to stress the fact, if you had $2 million and you moved all the money into children's account, then you have to wait for like 7 years before you can claim Medicaid. Even after 7 years, they can still come back and collect money from your children. The services that were paid for by Medicaid for your long-term care. That was slide number 33, Medicaid qualification criteria. Boy, that is brutal. Slide number 34, if you think you can pay from your cash reserves, it's going to have a significant impact on the quality of your life. If you try to take money out of qualified retirement funds, then you have to think about penalties and tax consequences. If you were to take money out of your savings, you have to think about leverage. Some people may sell their house, land, or have a reverse mortgage, but there is a better way, and that is the long-term care insurance. Slide number 35, that brings us to the topic of long-term, the ones which are provided by the New York Life Insurance Company. As you know, New York Life Insurance Company has been around for 175 years. It has provided multitudes of policies in terms of whole life insurance, disability insurance, business solutions, and of course, the long-term care solutions. There are basically two types of insurance policies. Just like life insurance, you have what is called the term insurance, which you pay as you go. That means you have to pay as long as you live, or asset financed, which is like a whole life insurance. You make a single deposit premium, or 5-period or 7-period or 10-period premiums, and you are protected for the rest of your life. And another benefit is that the asset can return almost 80 to 100% of the premium that you have paid towards the long-term care services in case you don't use any services at all. Slide number 36, it can be funded through income financed or premium based, which you pay monthly or annually, and this provides long-term care. There is some guarantee of the premium prices, but if it goes for the entire class, that is, if it goes through the entire Houston, it's going to go up for everybody in your group or in your city. So there is always a potential for the premiums to jump, and it is unpredictable. Whereas with the asset financed insurance, you pay the fixed premium for a fixed period of time, then you have a amount of long-term care benefits guaranteed, and you don't have to be paying any additional premiums. In addition to that, the asset financed insurance provides long-term benefits, death benefits, and return of premium options, and it is a tax qualified policy. The premium based policies do provide long-term care benefit. The benefits can be obtained at your home, at an assisted living, or at a community center, or in a nursing home. These are also eligible for dividend payments, and they are also tax qualified policies. I just mentioned about various places where you can receive these services. This is a slide number 37. Let's move on to 38. Both the income financed and asset financed long-term care insurance have many similarities and some differences in terms of the total cost involved if you live longer. Slide number 39. In addition to providing financial services to cover the cost of long-term care, these insurances also have tax incentives and also state partnerships. Slide number 40. Now let's look at some simple examples. I say simple examples because when we put this into the illustrator, it takes into account your age. It takes into account your sex. It takes into account your pre-existing medical conditions. It takes into account what kind of a policy do you want. It takes into account what kind of co-insurance or co-pay you are willing to pay, what kind of deductible you are willing to accept, what kind of a waiting period accept. So there are many factors which are taken into consideration to determine what your policy is going to, premium is going to be, and how much does it cover. But if you take a 55-year-old male person with a monthly premium of $143, you get $164,000 of long-term care coverage, which falls right in the middle of that bell curve which I just showed you a few slides ago, was the average, showing the average cost of healthcare services needed for an adult. Slide number 41. And let's take for an example a female patient who is 55 years old, puts $100,000 one-time single premium into an asset flex, a long-term care insurance, which provides $517,000 total coverage amount to pay for the long-term care services. It also adds $172,362 of life insurance face amount. So you're putting in $100,000, you're getting $172,000 plus in terms of life insurance, and in addition, you get close to or more than $500,000 worth of long-term care services. So basically, by going into an asset flex protection, you get most of your premium back as a life insurance when you pass away, and if you need coverage, it provides the long-term care coverage cost that is needed. Slide number 43. That brings us to the final point of a successful retirement life, that is having a peace of mind. By having long-term care insurance, not only are you able to protect your retirement nest, not only you're reducing the burden on your family, your neighbors, and your friends, but you are having a peace of mind that you have coverage if it is needed. If you don't need the services, you still get back 80 to 100% of your money that you put into asset flex long-term care insurance. So you have a win-win situation. You have an insurance coverage and you get your money back if you don't use it, and your family will be happy, your friends will be happy, and you will have peace of mind. Living a long life is a blessing. It is a probability. But planning is a necessity for you, for your family, and for your retirement funds. If you want to have peace of mind and enjoy your life to the fullest, you need to plan and you need to address the most important necessity at this stage of your life, and that is the long-term care solution. Slide number 45. So, do you have a long-term plan for a long-term care just in case you need it? Who is going to provide it? Where are they going to provide it? How is it going to be funded? And how are you going to deal with it? Do you have a written plan? When you write it down, when you put it on the paper, you realize that we all need help. You put these things on a piece of paper, you realize it is a real challenge. Your plan may or may not work. There are multiple ways to fund your money needed for long-term care, which is approximately 100 on an average. Slide number 47. As we mentioned earlier, 60 to 70% of the people over the age of 65 need some kind of an assistance in the form of long-term care. It could be for a short duration, or it could be a long duration. The best time to start having an insurance would be starting at age 50. Slide 47. At age 50, 80% of the people may be eligible for long-term care. There are a whole host of conditions like heart disease, diabetes, kidney problem, dialysis. All these things will exclude you from being underwritten for a long-term care. So it becomes important for you to start your insurance policy when you are healthy and when you have a high chance of being accepted for a long-term care. By the time you reach 70 to 79, only 50% chance of being accepted, even if you have money to pay for the premium. Slide 48. Now let's talk about the process of underwriting a long-term insurance policy. Just like any other insurance policy, we get your name and your demographics. You also get your medical history and your habits such as smoking, scuba diving, bungee jumping, whatever you do, your height, weight, blood pressure, and a list of medications. Continuing with the underwriting process, slide 49, records are needed based upon the age. The younger you are, the less history, because most of the information can be obtained from the primary care doctor or from Medical Information Bureau. And as we get older and older, the requirements become more and more, and you may have to have a face-to-face conversation to make sure that your cognitive functions are intact. Long-term care also covers impairment of cognitive functions, and if you are cognitively impaired before you apply for an insurance, the chances of getting the long-term care are very slim. Slide number 50. It goes without saying, at age 55, your premium may be approximately $130 for a $109,000 coverage, whereas the same premium would cost you $204, and by the time you reach 70, it could be significantly higher, to a tune of $500 to $800 per month. Next, why should you buy a policy from New York Life Insurance Company? New York Life Insurance Company has been around for 175 years. It is number 67 in Fortune 500 companies. It has been paying dividends for the last 50 years or so. So New York Life Insurance Company has been there, whom you can contact on the phone or call the main office to get your questions answered. Time is money. Time is premium. The longer we wait, the higher the premium is going to be. So the best way is to set up a one-on-one appointment, either in person or on Zoom. So we can run your particular information, data into our Illustrator, and tell you exactly what kind of policy would fit best for you based upon your resources, based upon your medical condition, age, and other factors, and then see which one can be implemented. Slide number 53. So ladies and gentlemen, in the priority is health. Number 2 is family. We don't want to be a burden on our family to just maintain a good health. And of course, we need our social network. We need the social network now more than ever before, so that we can spend all the extra time we have with people of similar interest. And all of this should enable us to protect our retirement assets. And I don't know about you, but I am allergic to surprises. So I need to have a peace of mind. Slide number 54. Thank you so much for listening to this presentation. And if you have any questions, we'll be happy to answer those general questions. And as far as illustrations, if we have time, we'll be happy to pull up our Illustrator and show you a couple of examples. But the best thing is for you to set up an appointment at no cost to you and no obligation to you. We don't need you to bring your checkbook. Let's sit down and analyze your particular needs, analyze your particular goals, and analyze your particular circumstances and see what is the best policy we can recommend to you. Slide number 56. Long-term care policy could be a great interest to business owners with key employees, to attract and keep your key employees, to provide long-term care benefit, which will greatly enhance your benefit packages. From an employer point of view, you get tax deduction from your businesses, and the key employees get long-term care. Employees get long-term care without having to pay from their pockets, which will enhance the relationship and commitment to your business welfare. Slide 58. From employees' point of view, they get tax benefit. They get group discount. They can also add their family members. Slide 60 talks about various tax implications when you are covered with a long-term care policy through your individual policy payments, or if you're through a C corporation or pass-through partnerships or sole proprietorship. But this is something we can talk to you on an individual basis depending upon your particular business circumstances. Slide number 61. As I just briefly mentioned before, this is going to be a very attractive feature for your key employee, where they benefit from having long-term care and you benefit from getting tax deduction from the corporation or the business. Ladies and gentlemen, again, we want to thank you so much for taking time to listen to this presentation, and we will be more than happy to set up a time specially for you so that we can look at your needs, goals, and aspirations and see what product or products best suit your needs.